$247,000. That is the average amount a senior man loses in his lifetime due to preventable financial errors. Not market crashes, not bad investments, not theft. Simple, avoidable mistakes that could have been prevented with a little more wisdom, a little more discipline, and a little less trust in a single point of failure. But here is what most people never understand about men our age. They look at us and see stubbornness. They believe retirement means slowing down. They assume that wealthy seniors enjoy showing off, that quiet men lack ambition, that simplicity is a sign of failure, that older men stop growing. They could not be more wrong. After 60 years on this earth, I have learned something that no financial advisor ever taught me. I have learned that a wise senior man's choices are not driven by fear, weakness, or age. They are driven by decades of experience, discipline, and a perspective that only time can buy. And one of the most important lessons I have ever learned is this. After 60, you never keep all your money in one bank. But this video is not about where you put your money. It is about something far more important. It is about the daily routine of financially disciplined senior men. It is about the habits, the mindset, and the Stoic wisdom that protect wealth, preserve peace, and build a legacy worth leaving behind. Now, you might be asking yourself, why does this matter to me? Here is why. According to the Federal Reserve Survey of Consumer Finances, the average American retiree has roughly $250,000 in retirement savings. That number represents decades of work, decades of sacrifice, decades of discipline, and yet studies show that nearly 1 in 3 retirees will outlive their savings. Not because they did not save enough, not because they made reckless investments, but because they made small, seemingly insignificant mistakes that compounded over time. Mistakes like keeping everything in one place. So let me ask you something that might change how you think about retirement forever. What if the greatest risk to your financial future is not the market, not inflation, not a bad investment, but simply putting all your trust in one place? The ancient Stoics understood something that modern finance has only recently rediscovered. Seneca, the Roman philosopher who advised emperors and amassed great wealth himself, wrote something that every senior man should memorize. It is not the man who has too little, but the man who craves more, that is poor. Think about that for a moment. For most of our lives, we were taught that wealth is about accumulation, more money, more investments, more security. We chased it, we saved it, we worried about it. But Seneca is telling us something different. He is telling us that poverty is not a number in a bank account. Poverty is a state of the soul. It is the endless craving for more. It is the anxiety that comes from tying your peace of mind to a single source of security. And this is where the wisdom of Stoicism meets the practical reality of retirement. Marcus Aurelius, the emperor who ruled the most powerful empire in the world, wrote in his Meditations, "The happiness of your life depends upon the quality of your thoughts, not the size of your portfolio, not the stability of your bank, the quality of your thoughts." Now, I know what you might be thinking. This sounds like philosophy, not finance. But stay with me, because this is where the lesson becomes practical. A financially disciplined senior man understands that his wealth is not just money. His wealth is his peace of mind, his freedom, his ability to say no, his capacity to walk away from unnecessary stress, his power to protect what matters most. And that kind of wealth cannot be kept in one place. Let me explain what I mean. When you are young, you put your money in one bank because it is convenient. You trust the system. You assume that everything will work out. You have time to recover from mistakes. But after 60, you have earned the right to be more thoughtful. You have lived long enough to know that systems fail. Banks make mistakes. People change. The unexpected happens. And the wise senior man does not let fear drive his decisions. He lets experience guide them. He does not keep all his money in one bank because he is afraid of losing it. He spreads his wealth because he refuses to become controlled by it. He knows that real security does not come from a single institution. It comes from the discipline of diversification, the wisdom of preparation, and the peace of knowing that no single failure can destroy what he has built. This is not fear, this is freedom. The Stoic virtue of prudence, practical wisdom, tells us that we should prepare for what might happen without being consumed by anxiety about it. We do not hoard our money out of terror. We arrange our affairs with intention, with clarity, with the calm confidence that comes from decades of experience. And that brings us to the psychology behind these wise decisions. There is a concept in behavioral psychology called loss aversion. It was discovered by the psychologists Daniel Kahneman and Amos Tversky, and it is one of the most powerful forces in human decision-making. Loss aversion means that the pain of losing something is about twice as powerful as the pleasure of gaining something. If you lose $100, it hurts twice as much as gaining $100 feels good. Now, think about what that means for a senior man. When you are 65, you have spent 40 years building your wealth. You have sacrificed. You have saved. You have delayed gratification. You have watched friends make bad decisions and learned from their mistakes. And now, the thought of losing what you have built. It is not just financial. It is emotional. It is psychological. It cuts deep into the core of who you are. This is why so many seniors make the mistake of becoming overly conservative. They put all their money in one place because it feels safe. They stop trusting anything that seems unfamiliar. They cling to what they know, even when what they know is no longer serving them. But here is the irony that the Stoics understood 2,000 years ago. The more you cling to something out of fear of losing it, the more you become enslaved to it. Epictetus, the former slave who became one of the greatest Stoic teachers, said, "Freedom is the only worthy goal in life. It is won by disregarding things that lie beyond our control." Now, let me connect this to your finances in a way that might change how you think about retirement. Your money is not something that lies beyond your control. You can manage it, you can protect it, you can grow it, but you cannot control everything that happens to it. Banks fail, markets crash, economies change. Fraud happens, mistakes are made. What you can control is your mindset, your discipline, your daily habits, your willingness to prepare without being paralyzed by fear. And this is where the daily routine of financially disciplined senior men becomes so important. Consider the concept of hedonic adaptation. It is the psychological tendency to return to a baseline level of happiness, regardless of what happens to us. If we win the lottery, we are excited for a while, but eventually we return to our normal state. If we lose everything, we are devastated, but over time we adjust. But here is the problem with hedonic adaptation and retirement. Many seniors spend their retirement years chasing more money, more security, more things. They believe that if they just had a little more, they would finally feel safe. They would finally feel happy. But it never works. Because hedonic adaptation means that no matter how much you accumulate, you will always want more. The Stoics had a solution to this problem. It is called voluntary discomfort. The practice of occasionally living with less, not because you have to, but because it reminds you that you can. It breaks the cycle of craving more. It helps you appreciate what you already have. Now, I am not suggesting that you give away all your money or live like a monk. I am suggesting that you build a daily routine that reinforces your freedom rather than your anxiety. A financially disciplined senior man does not check his bank accounts every hour. He does not obsess over market fluctuations. He does not compare his retirement to others. He does not let the news cycle determine his peace of mind. Instead, he has a routine that protects his wealth and preserves his sanity. He reviews his finances once a month, not every day. He makes decisions based on long-term strategy, not short-term panic. He diversifies his assets because he understands that no single institution deserves his complete trust. He lives below his means because he values freedom more than appearances. And he does all of this without anxiety, without obsession, without the constant worry that keeps so many seniors awake at night. Because he has learned something that modern psychology has confirmed. Financial anxiety is not caused by having too little money. It is caused by feeling like you have no control. And the daily routine of a disciplined senior man restores that control. Let me tell you about a man I know. His name is Richard. He retired 3 years ago at the age of 67. He spent his career as an engineer, a meticulous man who believed in planning, precision, and preparation. When Richard retired, he had a substantial nest egg. Over 4 decades, he had saved diligently, invested carefully, and built what he believed was a secure future. But Richard made one mistake. He kept almost everything in one place, one bank, one financial institution, one relationship that he had trusted for 30 years. And then, something happened that Richard never expected. The bank made a mistake, a significant mistake. It was not fraud, not criminal, not even malicious. It was a clerical error compounded by a system failure. And for 6 weeks, Richard could not access a significant portion of his savings. Now, Richard is a calm man. He is not prone to panic. But those 6 weeks changed him. He could not pay his bills without moving money from other accounts. He had to delay some expenses. He had to explain to his wife why their plans were on hold. He had to call the bank every day, waiting on hold, speaking to representatives who could not solve the problem. And the worst part was not the inconvenience. It was the loss of control. Richard had spent his entire life building a secure retirement. And in an instant, he realized that his security had been an illusion. It was dependent on one institution, one system, one point of failure. Now Richard eventually got his money back. The bank corrected the error. Everything was resolved. But Richard learned a lesson that he will never forget. He started spreading his wealth across multiple institutions. He opened accounts in different banks. He diversified his investments across different asset classes. He made sure that no single failure could disrupt his life. And here is the Stoic insight that Richard discovered through this experience. It was not about the money. It was about the freedom. Richard realized that his anxiety was not caused by the possibility of losing money. It was caused by the realization that he had given away control of his financial life to a single institution. By diversifying, Richard did not just protect his money. He protected his peace of mind. He restored his sense of control. He ensured that no single mistake could disrupt his retirement. Now, Richard's story might seem unusual, but the principle behind it is universal. The financially disciplined senior man does not trust any single institution with his entire future, not because he is paranoid, not because he expects disaster, but because he has lived long enough to know that systems fail, people make mistakes, and the unexpected always happens. There is another lesson that Richard learned. It is a lesson about saying no. Richard has grandchildren. He loves them deeply. And when they were younger, his daughter came to him with a request. She asked him to co-sign a loan for a new car. Now Richard could have easily said yes. He had the money. He had the credit. He wanted to help his family. But Richard said no, not because he did not love his daughter, not because he did not trust her, but because he understood something that many people never learn. Financial discipline is not just about protecting your wealth. It is about protecting your relationships. Richard knew that co-signing a loan could strain their relationship if something went wrong. He knew that money and family can be a dangerous combination. He knew that his daughter needed to learn financial independence, not dependency. So Richard helped his daughter in a different way. He sat down with her and explained how to save for the car herself. He taught her about interest rates and loan terms. He showed her how to build her credit. He gave her the gift of wisdom, not the gift of money. And that is what financially disciplined senior men do. They do not just protect their wealth, they protect their relationships, they protect their peace. They protect their ability to say no, with love, with clarity, and without guilt. This is the Stoic virtue of self-control in action. Seneca wrote, "It is not the man who has too little, but the man who craves more, that is poor." Richard did not crave more money. He craved freedom. He craved peace. He craved the ability to make decisions based on wisdom, not pressure. And he found that by diversifying his wealth, by protecting his peace, by learning to say no, he became richer than he had ever been before. Richard's story contains a lesson that every senior man should consider. He is not afraid of losing money. He refuses to become controlled by it. Real wealth begins where the need to impress ends. The wisest senior men protect their peace before they protect their pride. Retirement is not the end of purpose. It is the reward for a life of discipline. A quiet bank account is often stronger than a loud lifestyle. The richest senior men rarely feel the need to prove they are rich. Money is a tool. Freedom is the goal. A peaceful life is the greatest return on investment. These are not just words. They are the philosophy that guides the daily routine of every financially disciplined senior man. Think about what you do every day. Do you check your bank accounts with anxiety or with calm confidence? Do you make decisions based on fear or based on wisdom? Do you spend your money trying to impress people who do not matter, or do you spend it on things that genuinely enrich your life? Do you worry about what you do not have, or do you appreciate what you have built? The Stoics understood that true wealth is not measured by possessions. It is measured by peace of mind, self-control, freedom, wisdom, gratitude, purpose, strong relationships, and the legacy you leave behind. Marcus Aurelius wrote, "The happiness of your life depends upon the quality of your thoughts, and the quality of your thoughts depends on the quality of your daily routine." So let me ask you something. What does your daily financial routine look like? Do you have a system for reviewing your finances without becoming obsessed? Do you have a plan for protecting your wealth from the unexpected? Do you have a habit of living below your means, not because you are cheap, but because you value freedom? Do you have the discipline to say no to requests that would compromise your peace? These are not small questions. They are the questions that separate the financially disciplined senior man from the man who spends his retirement in anxiety. There is a quiet strength that comes with age. It is not the loud confidence of youth. It is not the ambition of middle age. It is something deeper, something earned through decades of experience. It is the wisdom to know what matters, and the courage to let go of what does not. Growing older is not about becoming weaker. It is about becoming wiser, more disciplined, more patient, financially independent, emotionally resilient, difficult to manipulate, comfortable with enough, rich in character, focused on legacy instead of recognition. The financially disciplined senior man understands this. He knows that his wealth is not just money in a bank. It is the freedom to live life on his own terms. It is the peace of mind that comes from preparation. It is the gratitude for what he has built. It is the purpose that guides his retirement years. And he knows that true wealth is measured not by possessions but by peace of mind, self-control, freedom, wisdom, gratitude, purpose, strong relationships, and the legacy left behind. Marcus Aurelius wrote, "Think of yourself as dead. You have lived your life. Now take what is left and live it properly." That is the Stoic call to action. It is not morbid, it is liberating. When you accept that your time is limited, you stop wasting it on things that do not matter. You stop chasing approval. You stop trying to impress people who do not care. You focus on what truly matters: your family, your peace, your health, your legacy. And that is the ultimate lesson of financial discipline. It is not about the money. It is about the life you build with the money. It is not about the bank. It is about the freedom the bank provides. It is not about the numbers. It is about the peace of mind those numbers represent. Now, I want to hear from you. What is the greatest money lesson life has taught you? What financial habit changed your retirement? What does true wealth mean to you today? What boundary have you refused to compromise? Share your thoughts in the comments below. Your wisdom might be exactly what another senior man needs to hear today. If this video spoke to you, please like it, subscribe to the channel, and share it with another senior man who values wisdom over status. We are building a community of men who understand that true wealth is not about what you have, it is about who you have become. Until next time, remember these words: seek wisdom, protect your peace, leave a legacy.